Often you see moves like this or this, where the chart makes jumps in between days. We call them gaps in the market. But those who continue the move intraday are called gap in go. But how does this happen? It happens when a stock gaps up in pre-market time, usually on news or high volume, and keeps running after the market opens. Traders like me and you look for those gaps in the opening session to catch it early enough to ride the whole move. So the goal is simple. Find the stock that gaps up or down, then with the right strategy, trade the whole move. But in order to trade the gaps correctly and make sure we find the right gaps of the current day, we must follow these steps. The first step is to use a screener to find the right stocks before each day's open. So in the morning, use a pre-market scanner. I personally use TradingView screener. I will leave a link down below, but you can use any screener you like. For the settings, we want to see stocks that gap up or down pre-market at least 3%. Next, we want the pre-market volume to be over 200k and the previous day's volume to be over 1 million. And last, we want the price to be above $1 because we don't want penny stocks as they often don't follow our rules and setups. So now that you have got your list, the second step is to choose the right stocks. But not all of them are ideal to trade them. Let me explain. As you can see here, the stock gapped up but ended up red for the day. That's because the daily chart of this stock looks bearish. That means that before we put the stocks directly to our watch list, we first have to analyze them one by one. By that I mean to check, for example, if the daily chart is bullish or bearish. Mark the support and resistance levels to see if the opening is near such level, or even check the news of the gap. Because some news don't actually justify the move. It might just be hype or low volume manipulation. So make always sure the gap is backed by real news or strong momentum. But remember, choose the ones with the clean setups and clear direction in the market. The third step is to prepare for the open, and that means to load your charts, make a watch list with your top picks, and put the right indicators on there. But not these. For this setup, we'll need the 9 EMA. So click on indicators, type in EMA, and click the first one. Go to the settings, choose the length to 9, and if you like, the color to blue. The next indicator is something all traders, especially the big traders, so banks and institutions, use all the time, which is the VWAP, or volume weighted average price. It simply shows where the most traders are positioned. So go to indicators, type VWAP, and click the first one. Go to the settings and uncheck all areas except the VWAP. Now to the fun part, how to trade it. First, make sure you're on the 1 minute or 5 minute time frame, but during the open, I prefer the 1 minute time frame. After the market opens, we want to see a small pullback to the 9 EMA and for the price to hold above. You can also trade it if it stays above the VWAP. Wait for confirmation, like rising volume or break of the previous candle's high. Set your stop loss just below that candle's low and aim for around 2-to-1 risk-reward ratio or at the highs. As you can see, this trade turned out perfect. You can also take partials at the highs and leave some shares for bigger gains. Here you can see another example where the price holds above the VWAP and continues strong. You could enter it here, stop loss will be under the candle's low, and take profit. In this example, the stock was so strong at the open that it didn't even pull back, it just pushed straight up with no entry chance. In that case, you avoid these stocks. Or you just wait for a small pullback and enter on the break. And as we expected, it worked out perfect. Now that you know the setup and how to trade it, let me show you some real trades we took live on our Discord channel.
Is that a gram? New card. What do you think?
Oh, very nice.
It's very cool, babe, but that's not.